Okay, so today we're diving into the world of stablecoins. They're often described as a bridge between crypto and, traditional finance. What exactly are we talking about when we say stablecoin?
Yeah, so essentially, stablecoins are digital currencies that are designed to hold a steady value, and they're usually pegged to a fiat currency. Think US dollars.
Okay, so while Bitcoin's like doing its own thing going up, going down, my stablecoins would stay pegged to, say, the dollar.
Exactly. Yeah, that's the idea. You get the benefits of cryptocurrency, the fast transactions, being accessible 24/7, but without the volatility.
Okay, that makes a lot more sense. But how do they actually do that? How do they stay stable? That sounds kind of too good to be true.
Right. Well, it all comes down to the mechanisms behind them. There are actually a few different types of stablecoins, and each of them has its own way of maintaining its peg.
Okay, well, let's break it down then. What are the main types that we should know about?
Sure. So the most common type is what's called fiat-backed stablecoins. And you can almost think of these as like the digital twin of traditional currency. So for every digital coin that's issued, there's an equivalent amount of fiat currency, like actual US dollars, held in reserve.
So it's like a one-to-one ratio. For every digital dollar, there's a real dollar backing it up somewhere.
Exactly. One to one. Some companies that you might heard of, like Tether, they issue USDT or Circle. They're behind USDC. Those are some of the most popular stablecoins out there.
Okay, that makes sense. But what about like people who want to stay away from traditional currencies, even in the digital world? Is there a stablecoin option for them?
Yeah, absolutely. That's where crypto-backed stablecoins come into play. So instead of relying on fiat reserves, they're collateralized by other cryptocurrencies.
Hold on. Wouldn't that make them just as volatile as other cryptocurrencies?
That's a good question. But to kind of mitigate that inherent volatility, these stablecoins are what we call over-collateralized. So for example, for every $100 worth of stablecoin issued, there might be, say, $150, even $200 worth of cryptocurrency held as collateral.
So even if the price of that collateral fluctuates, there's a buffer there, right?
Exactly, yeah. It absorbs the shocks and keeps the stablecoin, stable.
Yeah.
A good example is DAI. It uses Ethereum as collateral to maintain its peg to the US dollar.
Okay, this is where things are starting to get really interesting for me. It's like a whole new system is being built within the crypto world.
You got it. And it gets, believe it or not, even more interesting with something called algorithmic stablecoins. These are really fascinating. They're like the self-driving cars of stablecoins, you could say.
Okay, so how does that work, algorithmic stablecoins?
So instead of collateral, they use algorithms, right?
Mm.
And smart contracts, all to control the supply and basically control the price.
So if the price starts to dip below that peg, the algorithm just swoops in and fixes it.
Yeah. It's constantly monitoring the price. And let's say it starts to drop below a dollar, right? Like let's say it goes down to 99 cents. The algorithm sees that and automatically reduces the supply to create scarcity.
Wow, that's really interesting. That's some next level stuff. Are there any examples of that actually working right now?
Yeah, there are. FRAX is a great example. It's still a new concept, algorithmic stablecoins, but they show a lot of promise, I think, for DeFi.
Okay, interesting. So we've got fiat-backed, crypto-backed, algorithmic. Are there any other types of stablecoins out there that we haven't talked about yet?
Yeah, there's one more. It's called commodity-backed stablecoins.
Mm.
And as the name kind of suggests, they're backed by tangible assets.
Tangible assets. So instead of being pegged to the dollar or, an algorithm, it's pegged to something
What?
like gold.
Exactly. Yeah, gold. Or it could be oil, real estate, really anything like that. A good example is PX Gold. It's backed by actual physical gold reserves.
So it's like a digital gold certificate
Yeah.
almost. Very cool. Okay, so we've got all these different flavors of stablecoins, but why should I care? Are these just for like crypto experts or is there something here for, regular people?
That's a great question. And honestly, I think this is where things get really exciting because stablecoins, they could actually fundamentally change how we use and think about money, like in our everyday lives.
Okay, so tell me more about that. Why do stablecoins matter, not just for crypto people, but for everyone?
Well, imagine being able to send money across borders instantly, like sending a text message with very, very small fees, and you can do it anytime.
Okay, yeah, that'd be amazing. Especially for someone like me, I've got family overseas and international transfers. They can be Such a pain.
Totally. And that's just one example, right? This could really open up financial freedom in a big way, especially for people who maybe don't have access to traditional banking systems.
So this could be huge for people in developing countries or places with unstable currencies.
Yeah, exactly. Stablecoins can really provide that lifeline, that access. It allows people to store and manage their money digitally, even without a bank account.
Wow, that's really powerful. So I've got faster transactions, cheaper, greater accessibility. What else?
Right, and don't forget about the stability. We talked about, the volatility of cryptocurrencies. Well, stablecoins offer a way to protect yourself from that.
Right, because they're designed to maintain a stable value.
Exactly. So, when the whole crypto market is going crazy, you can move your money to stablecoins and not have to cash out completely.
That makes sense. So is this something you only use within the crypto ecosystem? Or can it be integrated with, like, how we use money in our everyday lives?
That's a great question, and that's what's so cool about this. I mean, it's not limited to the crypto world. We're already seeing it being integrated into different financial systems.
So you're saying that in the future, we could be using stable coins for everything, like buying groceries, paying bills, maybe even receiving our salaries.
It's possible, definitely. We're already seeing companies experimenting with, stablecoin payments and stuff.
Wow. Yeah, it really does seem like we're on the verge of a pretty big change in how we use money.
For sure. And this is even bigger than just everyday transactions, right?
Yeah.
Stablecoins are powering all this innovation in decentralized finance, DeFi.
DeFi, that's always sounded kind of, I don't know, intimidating. What exactly is that?
Sure. Basically, DeFi uses blockchain technology to, create financial services like lending, borrowing, trading, but without the need for traditional banks.
So it all happens directly between users on this decentralized network.
Exactly. And stablecoins are essential for this to work because they provide that stable and transparent way to exchange value.
Okay, I see. They're not just digital currencies, they're sort of the building blocks for this whole new financial system.
Yeah. And this is attracting attention from some big players. Even governments are getting involved.
Really? Governments are interested in stablecoins. Okay, now this is getting really interesting.
Yeah, it's true. A lot of central banks around the world are looking into something called central bank digital currencies, or CBDCs.
Central bank digital currencies. So that's like, what, a digital version of like the US dollar,
Mm.
but issued by the government.
Exactly. Yeah, like a digital form of cash, basically.
Yeah.
China's actually already got one, the digital yuan, and a lot of other countries are, working on developing their own.
Wow. So the lines are really starting to blur here between like what's crypto and what's, the traditional financial world. What does all this mean for the future of money? I mean, it sounds like a pretty big deal.
Yeah, it's hard to say for sure right now, but the possibilities are, kind of mind-blowing, honestly. Imagine a world where cross-border payments are instant and financial services are available to everybody and currencies are all digital, trackable.
Yeah, it sounds like you could create a much more like inclusive system overall, more efficient.
Absolutely. But it's not all, sunshine and rainbows. There are some challenges and risks that we have to think about as well. Like any new technology, especially one that could disrupt something as big as money.
Right, of course. So what kind of challenges are we talking about? What are the risks with stablecoins?
Well, first of all, it's really important to remember that, not all stablecoins are created equal. Some are definitely more trustworthy and transparent than others. So you got to do your research. Choose wisely.
So how can people navigate that? How do you figure out which stablecoins are legit and which ones aren't?
Transparency is a big one. Look for stablecoins that have transparent reserves, which means that you can actually check that they have the assets to back up their value. And audits, too. Make sure they're regularly audited by a reputable company.
Okay, that makes sense. What other risks should people be aware of?
Well, security, of course, is always a concern, just like with any cryptocurrency. Stablecoins are digital assets, right? So they're vulnerable to hacking if they're not stored securely.
So what are the best ways to store stablecoins securely?
Hardware wallets are generally considered the safest option because they store your assets offline. But, there are also good software wallets out there that have really good security features.
Good to know. Anything else that we should be thinking about?
Yeah, don't forget that, the crypto world changes fast. So stay informed about regulations and any news that could affect the stable coins that you're using.
So it's not like a set it and forget it kind of investment. You got to stay on top of it.
Right. Yeah. Follow the news, stay up to date.
Knowledge is power.
Right. Especially with something like this. So as we wrap up here, what's the key takeaway about stablecoins?
I think it's that stable coins are really a fascinating example of how technology and finance are coming together to create something totally new.
Yeah.
I mean, they really do have the potential to completely change how our financial system works,
Yeah.
but it's still early days, right? So lots of opportunities, but challenges too. It's a future that we're all kind of figuring out together, which is kind of exciting, right? Stablecoins, it's not just about digital currency. It's really about, like, rethinking how we use money altogether.
Exactly. I think we're just scratching the surface of what's possible.
It's been amazing learning about all this with you. Thanks for diving into this with me.
Yeah, of course. Happy to be here.
And thank you to all of our listeners for joining us on this deep dive into the world of stablecoins. We hope you learned something new today. Until next time.